I'm Saba from WebLingo, and we have a series where we interview professionals and ask insights from them. And this is going to be a very interesting interview because I want to ask you specifically about like finances because um, you've published 4 books and you're an educator across Alberta. So if you could take a few minutes to introduce exactly a bit more about you and what you do.
Yeah, well, so the again, like you'd mentioned, I'm an Alberta-based teacher, a music teacher by trade, but I do actually have some experience with teaching, finance and entrepreneurship courses, through the public system, and so that's kind of where, Middle Class Millionaire had started was more of a financial literacy piece, and more financial literacy education, and as I've kind of moved forward and I've done more within the business, I've started getting more people reaching out, business owners or people who are ready to retire. I even have colleagues who've talked to me about, what can they learn, in their, years approaching retirement. So something that has started with the financial literacy in classrooms has now, blossomed into a whole system of support and a community, and it's really cool to see that I'm working with everyday professionals, and some even are service business owners. So it's really cool to come on the podcast and share my story with everybody.
Amazing. Yeah. This is going to be specifically for service business owners because that's our audience, and I think you can provide like some amazing insight with this. So let's just dive in to the first question. So what do you think is the biggest mistake that entrepreneurs make financially?
Well, one of the common things that I find with people who reach out is they can confuse that high income with wealth and wealth development, right? The money comes in, but that money doesn't really have a job, right? And some common patterns that I've seen, for those of you who are familiar with, lifestyle creep or lifestyle inflation, the more that people make, it's common for them to spend more money, and in relation to the increase of their income. It's the bigger houses, the nicer cars, and the more expenses, but everything looks successful from the outside, but it might not be, the same as the inside. They're kind of reinvesting in things emotionally instead of strategically, right? So, tools and more marketing and more hustling, but there's really no separation between the personal money, the business money, and then the one that I like to teach people about, which is the wealth building money. And the biggest mistake is these people aren't paying themselves like an investor, right? And wealthy people decide first how much is captured, where it flows, and then where it's kind of building long term, and where are they building those systems.
Got it. So you would say that you would suggest service business owners to live below their means initially, right? And then reinvest. So what would you suggest they reinvest in?
Well, it's funny because that's always a common question that I get, specifically when the topic of investing comes up,
Yeah.
and it really does depend on a variety of things, right? Your age, your time horizon, how long you have to invest, your risk tolerance. Personally, in the very first book of the Middle Class Millionaire series, it's Middle Class Millionaire: 9 Principles to Your Financial Transition. That kind of lays out the basics, right? It kind of lays out, here's the foundation of wealth building systems and principles that have worked. And so I always typically ask those people who are curious, those questions I just previously outlined. But essentially, and more specifically for service business owners, is you want to make sure that you diversify your income sources, right? So a lot of the times, this is their only source of income is through their business. And, in the book, or in the first book, I describe, kind of the 3 types of investors. And I do focus particularly on the dividend investor, and those are investors that, yes, there is potential for growth and on the upside of the long term, but dividend investors are those who really prioritize that regular income coming in every month from those dividends, that come in from whether it's stocks, whether it's a GIC, a bond, or whether it's, ETFs, which essentially, for those who don't know, are just baskets of stocks, and you're buying a little piece of a lot of companies. So specifically for the service business folks, and for the people who ask me these questions, I say, again, it depends on your specific circumstances, but it's always the key thing is diversifying income sources, and the easiest way to do that is through dividend investing, and dividend investing income producing assets.
Hmm. Got it. So, would you suggest to have like a well-rounded portfolio? So some portion in dividends, some portion in just in savings. Like what do you think of having just a good chunk of money just sitting in savings?
Yeah, that's a really great question, because that's one thing that people typically don't think of, is they think I need to invest everything all the time. And it's common for me to discuss with even students who are in high school. It's always important to have a certain percentage of your portfolio as cash, ready to be enacted, whether the markets create a good buying opportunity. One common thing that's very common for students in entrepreneurship, business is finance courses is, well, Mr. Miller, what if, your stocks go down and you lose money? And I always answer with, if it's a good quality stock, if it's a good quality company and their numbers work, if it's just external, economic forces, or global, the global economy is affecting these, I get these quality companies at a discount. People love getting their groceries, on a 5 or 10% discount, but they never think of buying assets at that sale price.
Hmm.
And so yeah, just like you outlined, it's a really good idea to have a certain percentage of your portfolio in cash, just in case there are good buying opportunities at any time.
I've heard of the saying, timing the market is always worse than time in the market. And that's basically kind of what you outlined, where if you just consistently invest, no matter like ups, downs, it will compound, right? Would you suggest owners invest like a certain percentage of their income or a set sum, like 5,000 or 10,000 a month?
Mhm. That's a really great question. And one important thing, and of course, I'm sure service business owners realize this, is a certain portion of your income should absolutely be reinvested into the company. Whether that's through the business revenue or even your own personal income. There is validity to investing. Whether it's in marketing or whether it's in outsourcing tasks to others.
Yeah.
Um, but the old adage is, and the saying is, and what I really highlight in the book series is, 5 to 10%. Even if it's 5% of your income, you always want to be intentional, with paying yourself first. In a perfect world, with people who are financially, very healthy in their, financial development, they could go anywhere between 15 and 20%. But for those people who are very tight in their finances, and they don't have that 5, 10, 15, 20%, I discuss with them, start with $1. If you've never invested before, start with one single dollar, and invest it in, whether it's a basket of stocks, or I know a very common one is the S&P 500,
Hmm.
or in Canada here we have the VFV, .to. But it's subject to your life circumstances. But the general rule is, the old adage is, 5% or 10% of your income is yours to keep. So.
Got it. Yeah. Yeah, and the good thing about service businesses is that usually the margins are pretty high. And um, a lot of business owners really get caught up in this like constant reinvesting of it,
Mhm.
and they seem to overlook the fact that it's supposed to just bring in a good amount of cash flow, and then you could like take a solid amount out and still see pretty decent growth. So it's I think I agree it's important to know when to pay yourself and such. What does financial independence look like for a service business owner? And what should they be doing to set themselves up to for this?
Mhm. Well, and that a really a really great question there, because a lot of people think that, financial independence is never working again. They have that vision of laying on a beach, for years on end with, a tropical fruity drink in their hand, which of course there's nothing wrong with that, but true financial literacy and in the middle class millionaire mind space is again, my personal opinion is that if you can fund your lifestyle through the income you produce through your investments, without daily effort, your work can become optional and not required. In the book there's a whole section that actually outlines that. Chapter 2 in the first book of the series, it's entitled "What is Your Wealthy?" Because service-based, business owners could say, well, our goal is $400,000 a year, or, my goal is to own a coffee shop, and to be able to, provide employment. So for service business owners, it looks like, again, multiple streams of income and having that system of assets that pay you, whether you show up or not. It's very common from the people that I've interacted with, where they think they're a business owner, and of course they purchase the business, but what they've actually purchased is just a job, right? They are the sole person who's running the business. So yes, they're a business owner, but they're also, they've purchased themselves a job, and so that's the big point here. Is that you purchase a business so that one day it runs without you, and it can seamlessly run. You have those systems in place where your business can run without you, and then that's in the middle class millionaire space and in the mindset, that's what true financially independent people can build for themselves, is systems that pay them whether they work or not. It's that shift from income focused to asset focused.
We also talk about this in our content as well. So we developed stranger to client system, and it's basically just it's 4 pillars of service business, and basically what we talk about is how to set up these systems so that their business can, as you mentioned, just work independently of them. So it all ties into financial independence. Next question is, it's a specific scenario. So if a service business makes between, let's say, $150,000 and $300,000 a year, but no real wealth building system in place, where can they start? What can they do?
Mm-hmm. Yeah, and congratulations to those business owners that are making that kind of annual business revenue. That's a great place to start. I kind of think it's a 5-pronged answer. And again, this is why I am promoting and really developing this middle class millionaire music or financial literacy program, because the very first step of that is clarity, right? You have to understand where your dollars are going, because a lot of people don't actually know where every single dollar is going, and that's the first piece. Is you have to know to grow, and so the second piece of it is structure. Like I kind of mentioned before, you have your living money, you have your business operating money, and then you have your wealth building money. Now, I think it's important to include, up until recently, when I first started, my financial independence journey, I was very much focused on every single dollar that I can squeeze out of my budget to go into my assets is the ultimate goal, and as you can tell behind me, I have a vast library that financial literacy is just such a fascination to me, and I'm constantly reading books, whether it's new or old, and one piece from a book that I picked up that completely changed that aspect was, you absolutely need that little bit of income. That's the BU money, and I have an episode on the Middle Class Millionaire podcast that talks all about that. It's important to have that little bit of money that you have to spend on yourself, whether it's going to the movies or whether it's buying a new book or anything that you enjoy. I think that it's a very important and interesting thing to keep in mind. In your budgeting. So like I said, having your living money, your business money, and then your wealth building money. The third step is, probably one of my most favorite one, and this is more when people transition from the first book of Middle Class Millionaire book series to the second one, which is Middle Class Millionaire Turbocharged. And one of the main points of that book is automation. A lot of people think that wealth needs to be flashy and it needs to be, um, you know, super, what's the word? Flashy and just, current. But true wealth, is actually pretty boring and consistent. And that's you're removing the emotion from your decisions. And one thing that I talk to students about, or people outside of school looking to develop their financial literacy is like we've previously discussed, is you just have that consistent time period that you're investing, dollar cost averaging for those who aren't familiar, and you just automate it. And I show people that in my specific case, I have a separate investment account that automatically takes out a set amount of money from my bank account, and then it automatically invests in all the handful of stocks and ETFs and a lot of the assets and stock market. It's about automation. It's don't worry about the highs and the lows. Automate it, set it and forget it. And that's the fortunate thing about it. And it is boring, but the most important part is that it's consistent. And the fourth step, and this is where a lot of people slack, is the education. Right? They think all you need to be financially independent is a high-paying job, which of course that helps, but it's again in the second book of the series, it's about who are you becoming so that you can bring about that income and bring about that financial independence, and it's learning about how money actually works. A lot of people complain, especially here in Canada, about our tax system, but they don't truly understand how the tax system works. And that's again, I spend a considerable amount of time discussing them in the books. If people often complain about the tax system, they actually don't truly understand what everything entails. They see that this is a way that the government takes money from me. But the cool thing about it is that when you start to work with the government and you start to provide services that they don't have to, they will absolutely reward you for it. And so educating yourself on tax efficiency, cash flow, and then the basics of what is an asset and what is a liability, those are kind of the three big parts of education. And the last one, wrapping up this idea, is small repeatable actions. A lot of people are caught up in the popularity of social media trends nowadays, but the thing is, it's small, simple, repeatable actions. Not risky moves and not get rich quick moves, but the important thing to realize is that the goal isn't perfection. It's getting that momentum and getting, again, your money working for you, starting off small and letting time, do the rest for you.
There's a lot of things that could be done based off of that. And you mentioned tax efficiency, which is also one of the things that I noticed are very overlooked, because there's things like write-offs, for example, where you have some expenses and they could be written off and it's not taxed, as I understand, right? For service business owners, what would you say is like the best asset class to invest in? Or is it just for everyone in general?
Yeah, that's a great question, and I hate to sound cheesy here, but out of every single book, they're very quite different. There's 4 books total in the Middle Class Millionaire series, and we've got the 9 principles, which is the first. We've got the turbocharged second, and the third is retirement. So that's kind of going back to what we discussed. The fourth one is more of a workbook that you use to become more aware of your expenses and your finances, which a lot of people have used and become aware of. Oh wow, we're spending a lot of money that we didn't even realize. But coming back to the point is that one common thread throughout all the books is that people themselves, are that biggest asset. And again, I hate to sound corny and I hate to bring that back, but it's you could. And there's TV series about this, how the lottery ruined my life, I think it's called, and I don't know whether you've seen that. Um, I saw one episode in particular, and it was this gentleman who won, hundreds, and this was in America, hundreds of millions of dollars, and within a few years, he was worse off afterwards than he was, when he had first won the lottery, because, he was buying, he had about 4 or 5 mansions all over the United States. He had bought or he had purchased, a NASCAR, which he had actually raced in the NASCAR races, and the big thing there is realizing that he himself was the reason why he was broke, and especially initially in the first place. And then once he won the lottery, there was nothing in his mindset and his own being that changed. He had that mindset, right, of spend it and not think about it. And so to kind of to really hone in on the answer to your question, I think it's, you can have as many assets you want, income producing assets, but if you don't know how to use it, if you don't know how to be smart, and if you don't have the knowledge, you're playing a very risky game there. So yeah, I hope that kind of answered your question.
Yeah, it did. That's a very good outlook, investing in yourself, because if you get everything taken away from you, like you still have the ability to build back up, right?
Absolutely.
And the education is the foundation of it all. Um, so you wrote 4 books, right? The last one, I believe it's a retirement focused one, right?
That's correct. Yeah.
Uh, so what are some general suggestions that you have for business owners to set themselves up for this retirement?
hmm Yeah, and it's funny too, because I would have never thought in this whole space that I've created that the majority of people that I talk to and that I work with are people who are ready to retire. Again, it started off geared to students who are starting off their financial careers, and then it grew into people who have now in the working force, and then it grew to retirement. And again, I'm going to bring it back to, it's very subjective, right? What's your service business? What's the demand for it? What's your average income? But one thing that I can a little gem that I can share for sure is it goes back to that purchasing income producing assets so that your lifestyle is paid for whether you work or not. So kind of bringing that back to service providers is investing in assets, and even aside from the stock market or their business itself, it's investing in people who and structures that can help maintain that business in the owner's retirement years. So it's seeing that value of, yes, you've got your stock portfolio, you've maxed out your retirement savings, your RSP, here in Canada. But one of the biggest things is, investing in those systems that can help maintain your business. And then on the flip side, one big thing that's probably one of the biggest fears of retirement is running out of money, very much well before, you're ready to expire, so to speak, or and so the second thing to be aware of is understanding the tax system, not from a income and a business perspective, but a retirement perspective, because a lot of people don't realize that there's a lot of hidden taxes in retirement, and they don't learn about them until they're at that point. And so I think it's really important for people, and especially those ready to retire, is understanding that and utilizing your assets, utilizing all that capital that you've acquired, and receiving it very intentionally. Because a lot of people think they'll just pull from their RSPs, right? And for those who don't really know what an RSP is, essentially you put the money in, and I'm sure you might be familiar with this, but for the viewers that aren't, it's that income that you put in is it's not tax free, because a lot of people think, oh, well, I get money back when I put money in my RSP, but it's tax deferred, so you're not taxed now, but you're taxed later on. And the whole motivation behind that, and it's quite smart on the government's the government's viewpoint, because the goal is, and the commonality is, that people are going to be earning less money in their retirement, meaning that they're going to be taxed less. Which they're saving a lot of that tax now while they're contributing to their RSP, so that in hopes that they're not making, an egregious amount of money to be taxed. But one thing that I again outline in that book, the Middle Class Millionaire Retirement, and that I talk to people who are interested about, is being smart with where you're pulling your money first to limit those tax liabilities. And I always try to focus on seeing tax. Of course, yeah, it's very important. For every citizen, every responsible citizen, everybody. Of course, we have to, contribute our fair share, but we've got to be very intentional with how we start cashing out, so to speak, that money, so that you're not, making the mistake of having that tax liability. And of course, I call it tax liability because that's, it's money being taken out of your pocket, or it's wealth being taken away from you. So,
Have you found any service business owners wanting to, for example, sell their company when they retire? Do you find it common to see that?
yeah, there's actually a couple people who I've talked to, and a couple close friends actually, who are kind of in that space. And they're thinking, should I sell? With how the capital gains laws are right now, what's kind of the best offer? And there's lots of options. But again, it comes back to the subjectivity of the person. Is this a business that you want to give to your children? Right? Is this something that you want your kids to inherit? Because there's again different tax scenarios for different things, but ultimately I think that's the goal of business owners, right? Is build something up that you can sell it. And again, if you're at that point where you want to sell, I always encourage people, have a tax professional that you can consult to discover, what's the best financial way to do this to, again, pay your fair share, but make sure that you're not over contributing to your taxes based on what choice you make. So that's kind of the main thing, is that if that's the avenue you want to go to, make sure you consult a professional, and ensure that you're being very intentional. It's all about intentionality, with how you want to sell or inherit, or even put into a trust. I know that's becoming a very common thing now. Is I'm not sure whether you're familiar, but the new kind of saying is own nothing but control everything. And of course, this is a practice from people who were very smart and intentional with their wealth, and have amassed huge amounts of wealth. Is they open up a trust and they put everything in the trust, and then again they have different designations based on how they want to proceed, whether they want their kids to have access, etc. So there's lots of options. People have. They just have to again educate yourself and then make that choice. What's the most efficient way to transfer that wealth.
Do you suggest your readers to also invest in real estate?
That's a really great question, and it's one thing I've paid particular attention to nowadays, because back in the days of, I know one common person, Robert Kiyosaki. He's a big, huge advocate of real estate, and of course, real estate can be a very good way, specifically home ownership. Because you have that pride of owning your home. You have it's forced savings, and it's it has that ability, not guaranteed, but it has that ability to appreciate. That one, a lot of people think it's a very simple choice. Oh, I'll buy a rental property, or I'll buy commercial property, and then I'll be rich because so and so said so. But I think it's bigger than that, because people have to realize that it's not just the purchase price that matters, right? It's not the property taxes that matters. It's what's going on the bigger scale. Actually, I know as of today, January 28th, the Bank of Canada decided to hold interest rates. So there wasn't any cutting, there wasn't any raising. They decided to kind of hold it. And so there's a lot of factors that go into owning real estate, whether you live in it, or whether you have renters, or it's a commercial. So my piece of advice is know the whole process. And like over the last couple of years, I've purchased real estate, both rental and primary residence. And the cool thing was, one of my good friends, he just purchased his first home this year. And so I was grateful that I'd kind of already gone through that process, because he had so many questions, and it was so fulfilling, and I was just super grateful to help him out because he's a really good friend of mine. And there was a lot of stuff that he didn't realize, like we've been discussing. It's his big focus was purchase price and ability to have a renter in the basement. And I said, well, let's look at this on a bigger scale. There's fees, and there's closing fees you have to pay the lawyer. So opening yourself up to all the aspects of real estate is very important, because it's more than just location, and the price point that it's selling for. So
Well, let's just to wrap things up. What would you say is some of the key takeaways from this interview for service business owners? What would you suggest?
hmm number one thing is mindset and paradigm is key. That is the first thing. If I knew what I know now back when I was 16 or 17 or 18, wow, I would have put a lot of money into Bitcoin back in the early 2000s. And crypto is it's a whole other asset class that it just adds that extra layer of craziness and intricacy. But like I said, the first thing is educating yourself. And in the second book, I have a whole chapter about being so that wealth has no choice but to come to you. Being the type of person that just attracts wealth and attracts opportunities. And that's what I've learned since I had started teaching business and finances. It's all about what you know, and how you implement what you know. That's the biggest thing. Is it's a lot of people think, well, I need to have this certain thing in order for me to be somebody like this so that I can do what I want to do. But I like to kind of flip that on its head. It's I like to think of it as you have to do things first to become somebody who then has the ability to have whatever it is that you want to have. So like I said, the first thing is definitely being someone who is very educated on this stuff. And then the second thing, the only other thing, is just buying income producing assets. Again, if I would have known that back in, the early 2000s, unfortunately I was in grade 2 when I should have been investing in real estate. Here I was learning my ABCs when I should have been, a real estate investor. But that's the big thing, is diversifying your income streams and buying those income producing assets, that constantly generate for you without working. I don't know whether you've heard this quote, but as soon as I heard it, it completely changed how I see wealth development. And the second book, the Middle Class Millionaire Turbocharged, I start the book with that quote and I end the book with that quote, because everything in between just outlines it. And it's a metaphor. If you think of money as butterflies, and this is quite a common thing. If you think of money as butterflies, it's typical for people to run around with a net, catching it and running around, waving at it, and seeing at the end of the day, oh, I've caught 3 or 4 butterflies, which is great. But the smart person, the smart butterfly catcher, plants a garden, and attracts the butterflies to the garden. Yes, you might have to maintain the garden, or better yet, pay someone to maintain the garden for you. But it's now you've switched it on its head. You're no longer chasing the butterflies. The butterflies are now coming to you, due to their nature. So educating yourself is definitely the first thing, and buying income producing assets is the 2 main things that anybody listening to this podcast today can begin to implement and see almost immediate changes in their financial life.
Yeah, thank you so much, Justin. It has been very helpful, and thank you so much for your time. Where can our viewers find you?
Yeah, absolutely. So the main thing, the main kind of social media that I have would be the Middle Class Millionaire podcast on Spotify, and you'll know the one I've got, the my logo, which is the little piggy bank with sunglasses on it. That's kind of the trademark Middle Class Millionaire. And on there, I started that being motivated to my biggest motivation in starting the Middle Class Millionaire space is providing educators and people with resources to teach this stuff. You know, the government of Alberta actually has some initiatives right now in junior high that they want to really start focusing on financial literacy for junior high kids, which I think is absolutely amazing. And the second thing is Facebook. I do post a lot of stuff on Facebook. You find me, Justin Miller. So yeah, Facebook, and I have Instagram, TikTok, all the big social media platforms. But like I said, the main one that I really like to promote is the podcast. It's
Great.
just promoting resources, and it's cool to say that we've hit people in 5 different countries as of today. I actually just saw the statistics. We have over 1,400 views, and I just started this last year, so it's been really cool to get that out. So yeah, or people can even email me mclassmillionaire@gmail.com. That's another way if you want to get directly to me, or buy the books on Amazon. I've got all my contact info on there, and all the books are available on Amazon.
Where would you suggest they start of the 4 books?
Of the 4 books, if you're just a beginner, and you kind of have an idea of, well, I'm making this much, and you've just started budgeting, Middle Class Millionaire: 9 Principles to Your Financial Transition. Just start from the very beginning. It outlines everything, and it's a kind of a graphic novel with lots of pictures and lots of diagrams. Again, I want to very much engage young readers, and then once you kind of have that basic understanding and that good foundation, moving on to Middle Class Millionaire Turbocharged. And that one's, again, all about, now that you know the basics, you're just fine-tuning your systems. You're learning little tidbits that make the big difference. And then for those who are ready to retire or considering retiring, Middle Class Millionaire Retirement, kind of the 3rd book. And one, like I'd mentioned, one useful resource is the 4th book, Middle Class Millionaire Wealth Tracker. And essentially, yeah, that one's just a monthly logbook and a workbook that you kind of put in all your income sources. And I've included little fun monthly challenges to kind of keep it engaging and keep you excited about your wealth building. So, yeah, that would kind of be the sequence. And I hope that people get as much value out of it as I've gotten myself and that I've seen others get.
All right. Thank you so much, Justin. I hope you have an amazing evening, and I'm gonna link down everything below.
Fantastic. Well, thanks
All
for
right.
having me on
Thank
today.
you. Bye.
All right, take care.